Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is working. Hope everybody's had a fantastic evening so far. Looking forward to seeing many of you yet again. Saw a lot of you guys in the sentiment webinar just a few moments ago, so I appreciate you guys coming again. Spend another hour with me, or 30 minutes or 45 minutes, however long we go tonight. Hopefully we don't need to go too long. I just have a few things to share. And then obviously if you guys have some questions, um, feel free to share or ask those questions in the comment section or in the chat box. And if you're watching this in the recording, feel free to ask those questions in the comment section down below. But yeah, let's go ahead and get started before we jump into our COT report webinar. As always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So couple of things today. Here's what I'd like to accomplish in the webinar. So today I'd like to discuss um, just a little bit about the COT report for those that don't know what it is. I mean, we'll go pretty briefly. What I'd like to do is spend more time talking about some of the new innovations that I'm working on right now, and then but maybe we'll save that for the end. I think most important thing is I want everybody to be on the same page of what we're doing with the COT report, our plans for next year in 2024, how we're going to trade the COT report, what to expect as far as signals and all that kind of stuff. So that's something, those are the things I'd like to accomplish today. But if you guys have other things that you guys have questions about, could be COT report, could be scanner, could be risk management, literally any questions you guys have, feel free to ask those questions. There's no stupid questions in my program. I invite all your participation, and you'll find that everybody else here is pretty nice. So, if I don't get to your question right away, sometimes other people might chime in the chat box and answer it for you. So, well, let's go ahead and get started. Let's go to the CFTC.gov website. So we're talking about the COT report, right? So the COT report comes from the CFTC, and they are the Commodities Futures Trading Commission, right? And the COT report stands for Commitment of Traders. So these guys, what they do is they monitor and make sure that the futures and commodities markets in the United States run smoothly and with the least amount of fraud as possible. They monitor fraud. They monitor um, the liquidity and just the everyday business maintenance of the commodities and futures markets, right? And they have a lot of other responsibilities. And one of the responsibilities is to provide us with the COT report every single week. And this comes out every Friday at 3:30 p.m. Eastern. And where it's published is right here. So they can actually send you an email. There's actually a place here you can actually oh, by the way, you can give them feedback. By the way, if you email market reports at cftc.gov, you can, and they actually do make changes. I actually had a friend that asked them to separate a couple of things and how they do the COT report so that it could be scraped off of, like, so the data could be scraped off of a web scraper. I don't remember exactly what he did, but he actually sent a comment in and they ended up changing it for him, which was really cool, which is crazy because it's hard to get the government to change things. And he actually got them to do something, which was kind of cool. So yeah, you can email them. Let's see, there's a place where you can actually, there's a newsletter, there's a COT report newsletter you guys can sign up for. Maybe somebody can share that link if you know where it is, but somewhere in here you can actually sign up for updates because sometimes there was actually a time earlier this year. I don't know if you guys remember it. Some of you weren't even members of the program, but back in February of this year, it was in 2023. There was a month. Roger, I think you remember this, right? It was like a month, maybe a month and a week. I don't know, 5 or 6 weeks, where there was a cyber attack on one of the reporting companies of the COT report data, or one of the participating institutions had a cyber attack. It and it was so effective that they weren't actually able to release the COT report uh, to the public for 6 weeks. It was so bad. I remember that was a tough time. We actually had to we had to go back and basically just try to focus on sentiment. We had to focus on price action trades. It was kind of insane. I think they put a lot of safeguards in since then to protect the participating institutions that provide COT report data. But it is a risk. I think it was one of the only times that the COT report's ever been delayed, other than the usual delays. Um, so anyway, yeah, six weeks it took, and what they would do is like 4 weeks into it, they'd give you the COT report from like 4 weeks ago. So it was hardly useful because you're like, now the one thing that is, if that were to ever happen again, the cool thing about the scanner is a lot of the crowded market signals are likely to be the same. So you could probably trade the long-term signals for several weeks until you got the next report because likely they'd be the same signals. The weekly shift though, that would be the big problem if that ever happened again because you wouldn't have the data for, you know, 6 weeks. It was crazy. Anyway, you could probably go look it up because it was a thing. Like I said, it was a thing, back in February. You could search, Google search COT report, CFTC COT report delays, cyber attack, February 2023. It'd probably come up. Anyway, so basically, for those that don't know, and I know a lot, they're probably preaching to the choir, but basically, there's a lot of different COT reports in here. And the COT reports, they tell you what these participating institutions are buying and selling. Okay. One of the things I want to make sure is very clear when we look at a COT report. This is actually the most common COT report right here. It's this one. It's this Chicago Mercantile Exchange. And if you click on the short format, this will always pull up the most recent report. Okay, so there's nowhere you have to go to find, like, you don't have to click on the date necessarily because the most recent report will always be right there. If you want to go find historical COT data, for those of you that are want to nerd out or geek out on some of these on the COT data, there's these historical viewables you can click on right here on the left-hand side. And these are all the COT reports of 2023, here's of 2022, and then these are all the years archived going all the way back to 2005. And I believe there's even COT reports you can get your hands on that go back earlier than that, but they're just not categorized or filtered the way that they are today. They've kind of changed things recently, or they've over time, over the 20 plus years that we've had the COT report, they've kind of updated how it's been done. COT reports actually go back um, like a long time. There's actually books written on COT reports that go back to the 80s. There's Amazon books you can read about COT reports and how to use it, so on. It's crazy, crazy. So this is I meet a lot of traders that don't know about COT reports, and they're like, I've never heard of this, but it's actually been a thing for a long time, and a lot of institutions use COT reports. Um, and I've mentioned this before, but I've met with several CTAs and institution people who work at these institutions that use COT reports. And we actually trade it in a very similar way that they trade it. And since I've learned from these institutions, I've adjusted our scanner and some of the things that we do to use the COT reports in the way that they use it as well. So, and we'll talk about that tonight. But when you come into the homepage of the COT report, which is right here, if you just come down to Chicago Mercantile Exchange and click on short format, this is probably the most common COT report right here. And then I like to search, I do a control F and I search for whatever future I want to look at, like the Aussie. So just so you guys know, if you're a Forex trader, which all of us are pretty much, there's not going to be Forex pairs. They just have individual currencies in here. So you've got the Aussie dollar future. There's the Euro futures. You've got the dollar future. You've got the Canadian futures and so on. It's all in here. Okay. Now, in these COT reports, you've got non-commercial and commercial data. And this is really what I wanted to focus on to make sure everybody's clear on this. So basically, when we look at COT report data, non-commercial is your institutions that we want to follow. We want to be like these guys, okay? Uh, that is the main goal, is to trade like non-commercial. Okay. Now, why do we want to trade like non-commercial traders? We want to trade like these guys because these traders speculate. They actually trade in the markets for the purpose of speculating to make money, versus commercials. I've explained this in previous weeks, which you guys can go back and watch if you need more information on it. But commercials are basically institutions that use the futures market, to hedge or offset their products and services, just to stabilize their business. Okay. That's what commercial is. These guys actually constitute the biggest market. So these guys actually create the market for non-commercials. So when these guys move their positions around, it actually, like, who's their buyer? Like, if commercials sells, like, long position, if they get rid of long positions, who's going to buy it from them? Is it you or me? No, it's not us. We don't have the money. We don't have the funds to buy off commercials. So who buys it from them? Well, it's non-commercials, right? Generally, I mean, generally speaking, right? So I mean, there's other people that might buy or sell from them, but that's usually what's going on, um is when these guys move, these guys pick up whatever they leave. So what we have found is, when commercial moves the market for a week, usually if their movements are really, really big, the market tends to go in the direction of whatever commercial does for that week. Okay, because they're the biggest market. Like, let me give you another example. If you pull up the Euro futures, let's go to Euro. Just pull up the Euro real quick. This is the most recent Euro right here, all of this information. Okay. When you look at this, you see here's the commercial side. Look how big this is. Okay. That's like a million positions between the short, the long, and short. That's a million contracts, guys. That, oh my gosh, that's so much money. Okay. Um, okay, a million contract. That's a million times 100,000. Okay, $100,000 times a million. Okay, it's a lot. Okay, it's a lot of money that's being pushed around. Now when you look at non-commercials, they're still pretty big. Collectively, the long and short side is over 300,000 contracts, but commercials is just so much bigger. So again, when these guys move, when commercial makes a move in the market, it's usually so big that it causes a move, uh, directly to that currency or currency pair the following week. Okay. We are seeing that happen right now on the scanner. Let's take a look, right? What's going on over here? So when we look at the scanner, what's the biggest change? By the way, when you look at the shift in commercial, this is all from commercials. So when you see the shift here, this is not based off of non-commercials. The long-term signal is based off of commercial or non-commercials. There's a reason for that. We'll talk about that in just a moment. But the shift, though, is commercial. So I want to make sure this is very clear why we do this, but it's because they're the biggest market. And so when they move for the day, it's usually going to cause a big, or when they move for the week, it's going to cause a big ripple effect the following week in the market. And look at this. So the euro yen has a really strong weekly shift, right? So does the USD yen, Aussie yen, all of those are above 10%. CAD yen, all above, right? So let's go take a look at those. I haven't looked at them in a little bit, but let's pull up the euro yen for the week. Where is this? It is down today, but for the week, I believe this is up. Yeah, so from the start of the week, this yellow area, this is the start of the week right here. And this is where it is now. So it is definitely up. Obviously, it's pulled back since, but obviously we are up, from where we started the week. You look at what's another one from the scanner. You've got the USD yen. That's a strong buy. Let's go pull up the USD yen. up for the week generally. Obviously, it's pulled back in the last day, but it's been up for the week generally from here. Let's look at Aussie yen. That's a buy, right? Where's that one? Yep, up for the week from the start of the week here to where it is now. That's where we've gone.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Yeah, it could be. I don't know my math off my head, Lee. So if I did my math, Lee says if I did the math right, that represents $100 billion or maybe only 10 billion. Yeah, I think you got it. It totally could be $100 billion. Um, a million, hundred thousands. Seems right. I don't know. I could be. Who knows? Maybe it's even in the trillions. I don't know. But it's definitely in the B's or in the T's. But I know there's a big difference between the two. Once you start to get up into those numbers, like the difference between a billion and a million is so much. And then when you get the difference between like a billion and a trillion is also so much. It makes a billion look like nothing when you look at it. Yeah, so I don't know. Um, a half an Elon Musk. Yeah, seriously. Right. So anyway, what I was trying to show you guys is that commercials, when they move, it really does affect the market the following week. It's a real thing. It's not just like some made up whatever. Like I've done a lot of back testing. I'd be more than happy to. I've got other webinars that I've shared where I've done back testing on commercials, and yeah, when they move, it usually creates a ripple effect the following week. Um, here's the CAD yen. This is a buy for the shift. Let's see if that's the case with the CAD yen. Um, yeah, for the week, it's so far up. At the moment, it's up for the week. And I mean, we'll see if it ends lower. We'll see if it comes lower, but so far it's up from where it started. This is where we started. This is where we are now. Obviously, it was higher earlier today, but still up for the week. And who knows? Maybe this will actually come up and go even higher. We will see. Definitely, we'll see. Okay, so there is that. So I wanted to show you that about commercials and how that affects the scanner and so on. What else did I want to show you guys? Okay, so That's what we do with shift is when these guys move, we generate signals off of that. Okay. Now, I don't want to follow these guys long term though, because what are their goals? These guys' goals long term is to move the market. Um, well, it's actually not to move the market. Their goals are to hedge. They're hedging the market because of their business practices. The way they operate, they require some kind of hedge in the futures. And so that's why they trade. And they hold positions for whatever reasons they have. But again, it's not for trading. These guys, though, non-commercials, that is their job. It is to trade. When they take positions, it is to trade in the market. That is their job. So I like to follow these guys on a more holistic or longer term scale. So when non-commercial starts to buy up a position, I usually want to buy up as well. Okay. Let me give you another example of this. So when you look at the scanner again, when you filter this by signal, okay, so when you filter by not signal, by long-term signal is what you want. Come down here. You obviously got these strong sells and strong buys. I'm going to ignore these for a second. I'm going to explain why in just a moment. But you look at these ones like silver, you look at US 30, NAS 100, you look at the pound, you look at New Zealand dollar. These are sells. Why is the pound dollar a sell? Why is the New Zealand dollar a sell? Um, because the banks actually have a overall sell position on the pound dollar and on the New Zealand dollar. That's why that's a sell. These ones are neutral right here in the middle. You can see, there's no signal. Why are those no signal? Because there's just not a bias by the banks right here with these neutrals. There's just no bias, right? So we don't really worry about those ones right there. These ones are all buys right here. Why are those buys? Because the banks have positions buying these, and I'll show you on the journal if you guys want to see the actual data. The scanner doesn't necessarily show you the data behind it. I have it in the journal. I'll show it to you real quick if you want to see it. Yeah, let's pull it up. I'll show you guys. So yeah, let's show you over here. So if we go to the data and then we come over to this side, you can see all of this. So yep, this is it. Non-commercial percentages. Okay, so these two columns right here, this is what we're looking at. So what this is saying is um, this is how long the banks are on each individual currency or currency pair, and this is how short the banks are on those same currencies or currency pairs, right? So like you look at the euro, super long right now, very long currency, and another one that's really short would be like the franc or the CAD's really short, the Aussie's short right now. Those are shorted by the banks. One that's kind of in the middle would be like the pound. It's generally bought by the banks right now, but it's not super biased. It's just like the banks have a little bit more interest in buying the pound, but it's not like it kind of goes both ways. Yeah, they don't really have a lot. They don't really have this major direction to it. Um, the dollar is very long right now, super duper long. 76% is very long. And conversely, yeah, and you've got all these shorts up here. So that's what we're looking at when we look at this information is we're just trying to figure out, and I figured this out on my own. So I ran some calculations that helped me figure out what that percent is. If you need help with this, I could teach you how to build out a journal like this if you want to do that. I'd be more than happy to teach you how I did this, but because the COT report doesn't tell you what the percentages are, I had to figure that out. Okay, so the COT report just gives you it just says, hey, this is the COT report just says, hey, these are the raw numbers, and then from there you have to figure out what you want to do with those numbers, right? And that's what this journal does, and that's what the scanner does for you. Okay. Okay, now one of the things that's really important to recognize with COT data, though, and this goes back to kind of our sentiment conversation from earlier, is when the banks get really, really wound up in a position. Like, for example, on the euro, they've got really big long position on the euro. You look at the franc, they've got this really big short position on the franc. When they get really expanded out like that, okay? So when they've got a really big long over here on the euro, and then the franc is really, really short, when you fuse those together, you get what? You get the euro franc pair, right? So that means the banks, if you were to look at this from a Forex point of view, take the euro, pin the franc, right? Those are the two longest or one of the two longest things, right? That means the banks have a really big long position on that euro franc. So usually you'd want to buy that, right? Well, yeah, but the thing is, um, yes and no, but mostly no. Here's why. So basically, when the banks get really, really long, that that trade opportunity has already sailed. Okay, the opportunity to follow the banks has already come and gone. Okay, right. So just because they are indeed very, very long now and very, very short on the other, conversely, on the other pair or the currency, that doesn't mean you want to just follow them because, oh, they're super long here, they're very short here. This is actually one of the problems we had with leverage funds, right? Leverage funds was the same thing. You would just take the longest ones and the shortest ones, and sometimes it'd work out, but it was kind of frustrating, right? And so and I think it's because of the same concept, right? So that's what the whole crowded market indicator does. So when you go to the scanner, when you go to the scanner and you filter by a crowded market, you can see these ones that float up to the top that have 5 out of 5 stars. These are the currency pairs that have the biggest holdings by the banks right now. Okay. Out of everything on the scanner, those ones that are at the top, that means the banks have the biggest position on those pairs. So what we've been doing recently, and this has really, really helped with our long-term signals and getting us in the right direction and so on. What this does is it says, hey, these, how many is this? One, two, three, four, five, six, seven, eight. These 8 pairs are basically overbought or oversold. And so we should expect these to have a long-term signal that will prevail in the coming weeks, maybe even this week. Just be ready for it because that's the impending move. The banks have some agenda with these currency pairs. These 8 pairs have an agenda by the banks. They have to do something with it, and we know exactly what that thing is, and that is to liquidate their position. And so we have to prepare to liquidate with them. Okay. So the scanner already tells you what direction you need to go. So if it says strong sell like it does with the euro yen right here, you should know that that's the overall move the banks want to create. Okay. They want to create that move at some point. Okay. Same thing with the dollar yen. They want to create this move. Okay. Could be this week, could be next week, could be the week after, could take up to, 3 weeks. Is kind of what I've seen. But at some point, you're going to have a multi-hundred pip move in that direction. So be ready. Don't spend too much time going up opposite of the long-term signal because that's where the banks ultimately want to go. And again, it could be this week. We've had a lot of really good weeks with the long-term signals recently, like with the euro franc, the dollar franc, USD CAD. All of those sells have been marvelous. Euro CAD, if that's still in here, which, oh yeah, it still is, been very, very good signals, right? Aussie dollar long has been a good one. Euro Aussie sell. All of these have been pretty much fantastic and continue to be fantastic. And that will change as soon as this goes to 4 stars, I'm no longer interested. Okay. I can't remember at what threshold that switches off, but when we get a new set of COT report data, this weekend, we have 8 right now. If next week you have 6 or 7, then you know that some of these fell off. So when that happens, I no longer want to speculate that move. I'm only just trying to find the very top currency pairs with some pretty biased banks positions. Okay. So a lot of people ask me if it says crowded market, that means a reversal's coming. So should I buy this instead of sell? the euro yen. No, I would still look at the euro yen and say, okay, um, maybe this week's not the best week to trade it because you've got some mixed signals here because the shift says buy, but the long term says sell. So you could probably stay away from this for now. Okay. But in the coming weeks, my guess is this long term signal will still be here. And if the shift, like for example, if next week or in 2 weeks, if the euro yen has a negative shift and the long term signal says strong sell, I'll be all over that. Yeah, I'll be all over that trade. Okay. Because that's exactly what you want to see is correlation between multiple metrics here on the scanner. So I have found that to be one of the most successful ways to trade the COT report, to be honest. And this actually reminds me. So a while ago, I had this conversation with a CTA. He was he runs a multi-billion-dollar fund that uses the COT report, and that's precisely what they do. Is they look at where the banks are positioned, and they try to fade the non-commercials. Okay. So what does that mean to fade non-commercials? Fading is just another way of saying they go against the trend, go against the grain. So if the banks have been buying the euro yen like they have, and the euro yen's been going up for several months as a result, then the next most likely thing to have happen is for that reversal to take place, right? So that's what the crowded market indicator is trying to say is that there's going to be a move to the downside coming soon because the banks have to get rid of these long positions that they've held for such a long time. In fact, I think let's actually take a look at a euro yen chart. I believe this has been going up from a longer term perspective. Let's see what this has done. Um, yeah, so this is it's already started to crack, but this is the euro yen over, let's see, this is the last like 4 months. This is the euro yen, and it ultimately was up here. This would have been the ideal time to have sold. I believe it was in crowded market up there. And it still is. That's the crazy thing about it, is it's still in crowded market phase, which like I said means there's probably more for this to continue lower, right? There's more for this to continue down. Um, anyway, so like I said, you've got, let's see, this was in crowded market phase several weeks ago when this started to crack, and it still is today. So all I could say is that this is probably going to continue down for the next little while until it leaves that crowded market phase, which could be a while. I mean, here's a 2 hour chart. Look at this. This has been going up. How long has this been going up? This is all the way back from May. Oh my gosh, this has been going up since like this keeps going until when did this move start? I think it really started. You could go all the way back to 2022 here. Yeah, like 2022 is when you could was when it started. Um, and now it's just starting to crack. So from the overall scheme of things, this has probably got quite a bit more to go down still. Okay, it's probably got quite a bit more to go down. Okay, it's how I would look at this. Um, from a long-term perspective. Okay, so okay, what else did I want to show you guys here? Any other questions, by the way? I'll get back to your comments here, but any other questions on the crowded market indicator, the COT report, anything else? What other questions do you guys have? Let me see right here. So Lee says, if I did the math right, that represents, okay, yeah, you got 100 billion or half an Elon Musk. Banks are like bookies, hedged to balance their books and making money off interest. Yeah, vigorish. Okay. Yep, exactly. So good, good, good. I'm trying to think Um, what else do we need to discuss here? Any other questions do you guys have about the COT report, what we're doing, how to use this? Just as a reminder, again, I think it's obvious, maybe it's not though, but we look at COT report from two different perspectives. We look at it from a weekly and we look at it from a long term. Okay. The weekly has to do with the shift in commercial data. When shifts are big, that means you should probably put some stock into it. Really pay close attention to that if there's a big shift. Okay. Anything over like 7.5 to 8% is a pretty solid shift, and you should probably pay attention to it. Okay. That doesn't mean the ones that have smaller shifts won't work either. It's just, the bigger the better. Okay. Um, and then the second most important thing would be your long-term signal. I wouldn't say it's necessarily the second most, it's just the second thing. I think they're both equally important. Okay. So weekly shift, long-term COT data, they're both equally important. Okay. Um, However, I will say this though. I have noticed, I don't know about you guys, but I have noticed that when the markets get into long-term, like when the long-term signal says strong buy or strong sell, that means that you're in crowded market territory. And I have noticed that the long-term signal seems to be a better indication of where the market's going to go um, for the week or for even the next couple of weeks than any other indicator I have found. Okay. Now, again, it may not go that direction for that week in particular. Nothing's 100%, but it does seem like the long-term signal is just a lot more powerful when you get it into that crowded market territory. And I have actually already set up the scanner in such a way to recognize that. So if that's why you might actually, so I'll give you another example. When you filter this by overall signal, there's a couple of trades in here that don't have any other signal other than the crowded market. Let me try to find you one. Yeah, like the USD CAD. This is a strong sell this week. Why is it an overall strong sell? There's no weekly shift that really matters. There's no sentiment signal. It's just the long-term signal. Well, I have discovered, and this is what my opinion currently, that if there is no sentiment defying the long-term signal, and if there's no weekly shift that defies the long-term signal, then we should go with the long-term signal. It's that powerful. Okay. That's been my understanding, and that's how I view the long-term signal is very, very powerful if nothing else defies it. Like no weekly shift that says you shouldn't do this, no sentiment that says you shouldn't do this. It's a great signal if it's standalone, as so long as nothing else defies it. It doesn't necessarily need confirmation. I mean, I'd love confirmation, but if it doesn't confirm, I'm actually okay with taking that trade. So that's why it'll still be classified as one of the strong overall signals for the week if it's standalone, just so you guys know. Okay. Um, yeah, and I think the USD CAD has actually fallen, it's gone down this week, hasn't it? I believe it has. Let's pull, I think it's gone down quite a bit. Yeah, it has. Let's pull up the hourly. You can see from the start of the week here, and even last week it fell off a lot. This one still continued lower from the beginning of this week. Not a lot, but it's definitely down from where it started. This is where the week started, and it's just kind of generally melting away. Um, and that's to be expected because that's what the banks are trying to do. Obviously, I think they'll just continue to do that. Bill says, a little off topic, but when do you think you'll have another meeting about prop firms? Okay, great question. I think I had one scheduled for next week. I may have canceled it though, because instead, you know what? Instead of canceling it, here's what we'll do. Let's go ahead and book another one, but let's do it at the beginning of, you know what? Actually, next week would be a good time to do it, I think. In between the break. We won't do a lot of classes next week. In fact, if you guys look at yeah, we have, yeah, it's scheduled. Yeah, yeah, it is scheduled. So here's the schedule for next week, right, guys? This is still tentative to change a little bit. But next week, there's no classes on, Monday. Happy Merry Christmas, right? So enjoy your Christmas, enjoy your families. enjoy that Sunday before Christmas. That's always a nice time with the family and to put things in perspective and to um, um, have that peace in your life. So definitely spend that time. No classes Tuesday. Let's not meet on Tuesday. I'm also going to be out of town. Tentatively, I'm still planning on doing these two webinars next week on Wednesday night. Okay. If I end up can't, I just need to talk to my wife on my schedule. So that's the only thing. If I cancel the prop firm, I'm not going to cancel. I'm just going to postpone it to a different time. Okay. So I'm not going to cancel. We'll just move it to another date. Hopefully either the 28th or sometime first week of January. So just tentatively plan on that. I should have this confirmed by tomorrow. At the very latest, it'll be confirmed by Friday, but let's plan on that on the 27th. Okay, for prop firms. And then I'm only planning on doing one live trading class. I was going to do one on Friday here, but again, that could change too. I'm just not even going to do trading. Like I'm not going to trade next week. I'm it's that 1 week a year I just don't trade. So and I don't think you guys should. The only reason I've asked some of you guys to trade, by the way, though, for those of you who have had a one-on-one with, like if I've met with you one-on-one and I've asked you to trade, um, it's just because it's for practice. Like you're new to the COT report, you're new to the scanner. So I want you guys to trade for practice on a demo. But if you're a seasoned trader with me and you've got prop firm accounts and you've got a live account, don't do it. I'm not taking trades next week. Okay. Uh, if I do take a trade, it's really just for maintenancing like a long-term account. That's it. I'm not going to do any swing trades. I'm not going to be doing any scalping. I'm not going to take any overnight trades next week unless, of course, you're practicing and I've asked you to practice. That's the only thing I want you to do. Okay. Yeah, that's it. Okay, very nice. I always look forward to Wednesday nights. Oh, I love it. Yeah, thanks. I appreciate you coming. That's awesome. I appreciate it, Bill. And Roger says sounds like good advice. I think so too. I think that's probably the way to do it. I've traded through Christmases before. There will be some moves next week, but it'll drive you crazy. Like, in fact, I double dog dare you to look at the charts for just a few minutes on Christmas Day. It'll look like this. Zit, zit, zit. Like it'll be open because the rest of the world still has their markets open. Well, I don't know. They close them still. There's still a little bit going on because there's plenty of people around the world that don't observe Christmas, and so there still is a market, but it's like, I mean, it's terrible. Like you would never want to trade ever again if that's all you had to deal with, right? New Year's week, yeah, I plan to trade full force the following week, so that is going to be, if you look at our schedule for the week after, we'll meet Monday morning on January 1st, live trading, and yeah, we'll get after it. Oh wait, no, 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 excuse me. That's New Year's Day. No, we're not going to trade live New Year's Day. However, you can trade COT report trades. Like you can take them on the 31st and hold them all week. That's totally fine. But no, we're not going to trade on that Monday. The next call will be Tuesday, the 2nd. Yeah, just remembered that's how we're going to do it. Yep. And we'll take live trades, we'll take signals. Will the COT report be delayed? That's a great question. I believe it is. Let's double check that real quick before we wrap up. Um, yeah, it may not even come out until, can we actually see where do you guys go for it's over here somewhere, the future schedule. Um, Historical viewable release schedule. Here it is. Okay, release. Oh, okay. So, oh wait, no, 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 no. So we already have the 22nd COT report. Yeah, we already have. No, 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 no. We're gonna get a new COT report on the 22nd. They're saying we're gonna get another COT report on the 29th. That's what they're saying, at least. No, it's not delayed. It's not delayed because yeah, it's not delayed because we got this one on the 22nd or the 15th last week. We're gonna get this one this weekend on the 22nd, and then on the 29th we're gonna get another one, and then it looks like on the 5th of January we'll get another one. So yeah, we should be good actually. That's surprising because they really messed us up in November. 2 weeks out of November we had it really kind of threw us off, but it doesn't look like they're doing that this time. So all right, guys. Well, I really appreciate you. Thanks for coming and hanging out with me. We'll do live trading in the morning and we'll check up on some trades. We'll probably take some more trades as per usual. So have a fantastic rest of your evening, guys. Thanks for coming, and we'll see you guys in the next webinar.